Sir, can I ask one question?
Yes, sure. Go ahead.
What are synthetic indices?
Synthetic indices refers to financial instruments that are created to track the performance of a specific financial market or asset, such as a stock index, currency, or commodity. Synthetic indices are often used for trading and investment purposes, as they provide exposure to a broad range of assets with a single trade. Synthetic indices are constructed using derivatives, such as options or futures contracts, which are designed to mimic the performance of the underlying asset or market. The value of a synthetic index is derived from the performance of its underlying assets, and it is often used to provide a benchmark for the performance of a particular market or sector. Overall, synthetic indices are a popular tool for investors and traders seeking exposure to specific financial markets or assets. However, it is important to understand the underlying mechanics of synthetic indices and the risks involved before investing in them.
Why traders trade synthetic indices?
Trading synthetic indices is similar to trading other financial instruments, such as stocks or commodities. Investors can buy or sell synthetic indices through financial intermediaries, such as brokers, and trade them on financial markets, such as exchanges or over-the-counter markets.
Which broker offers synthetic indices trading?
Deriv broker offer synthetic indices trading.
Can we trade synthetic indices automatically? Like with robot?
VantageX automatically trades synthetic indices including Crash 100, Crash 500, Volatility 75 and Volatility 100 indices, with accuracy of up to 91% and minimum drawdown. VantageX uses artificial intelligence to predict these indices' movement.
Thank you for the explanation. I would love to trade with VantageX.
Sure. Everyone should try to achieve financial freedom.